Now that Nvidia earnings are out of the way, is the AI trade about to take its next leg higher? Let's ask Tom Lee. He's Fundstrat's head of research. Welcome back. So how do you assess this now? We've cleared the way, right? All the AI stuff's now out of the way. We're looking at yields, we're looking at oil, we're looking at the Middle East. But how do you feel about this market when you just heard Chris Harvey at the top of our show saying we're going to have an everything rally that's going to take us past 8,000 by the end of the year?
Yeah, Scott, I think the market is pretty healthy. It showed resilience in the face of higher oil, higher yields. But I also think the U.S. is pretty unique because we do have a structural driver for the economy, which is not only is the U.S. the producer of AI, but we are also relatively energy independent, and that's been exposed by this war. And the consumer's in pretty good shape. So, I mean, I think there is a pretty good runway. So I'd agree with the idea that stocks, compared to the start of this year, have more upside into year end. We've got a few things we have to work through as we get later through the year, but I think for now the fundamentals are healthy, and that's supported by earnings.
I don't know what shape the consumer's in, to be honest with you. I mean, I understand the K-shaped economy, obviously. Top of the K is better than the bottom of the K in terms of the durability to keep spending. But you listen to Walmart, which was pretty cautious, and you're like, what is the real state of the consumer? And if oil prices remain elevated for too long, is that the thing that wrecks the story?
Scott, yeah, it is, in a way it is K-shaped, because if I had to say, okay, what are the things that are sort of ballast and things moving the consumer, of course we know that it's higher gasoline, higher food, and of course there's going to be a shortage of some petroleum products. But on the other end of that spectrum is, the wealth that's going to be created by the IPO of SpaceX, OpenAI, et cetera. I mean, that's several $1 trillion worth. And as we know, there's like a marginal propensity to consume from the wealth effect. So I think the consumer is getting a tailwind later this year, but a lot of it is for those who own equity.
I mean, a tailwind from owning the IPOs?
Well, it's actually the private investors. As we know, SpaceX was probably seeded at $50 million. It probably raised tens of billions over the last decade. But now it's going to have a net worth valuation of around 1.7 trillion. So that's actually now going to be monetized for the LPs of the funds that invested in SpaceX. So they're, several $1 trillion is quite a lot of stimulus to the economy.
Wow. Okay. Hampton's real estate market. Watch out. AI trade. How do you feel about it after Nvidia?
I mean, a company with the size of revenues, Nvidia, growing it at 8%, I think shows that there is still, unrelenting demand for the product Nvidia sells. And then we know that those who are starting to use AI are actually noticing a gain of function on productivity. Ken Griffin really stated it well when he says he could see it's replacing a lot of analysts. So to me, I think not only are the users of AI benefiting, but there's still a shortage of those who are supplying the equipment.
But aren't you still calling for a pullback in stocks and something meaningful? Like the one we had already didn't really qualify, if you will, under what you were thinking could happen, right?
That's right, Scott. I think we had like what Ed Yardeni would call a rolling bear market in things like Mag 7, and of course last year in energy, but in software, et cetera. But I think later this year, the market is going to confront a few things. One, of course, is just your typical midterm seasonality, the uncertainty into that. The second is that there is a day of reckoning coming because the inventory of petroleum products is short and not being alleviated anytime soon. And the third is we probably have some concerns later as these IPOs come, SpaceX, OpenAI, et cetera, that there's a lockup expiration later. So I think that's a supply overhang. So I think that dynamic comes to play later this year. But in the meantime, I think investors are focusing on AI fundamentals, and there's a real shortage, and stocks that are working are the ones that are selling something that's scarce.
Tom, I want to make sure I heard you right. Are you calling for a rolling bear market in Mag 7 names? Because is that what you're looking for? You look for these stocks to become weaker at some point, and dramatically so at some point this year? Is that what I heard you say?
To clarify, I think we've already had a bear market in Mag 7 and software. I think there's going to be a bear market in other stocks later this year. Yes. But I think it's going to spare the Mag 7 and software. So it's going to be names that either got lofty or are going to be affected by the fact that there is a lot of supply of new stock later this year, or the companies that are going to get hit by the shortage in petroleum products. So I think there's reasons that we could have headwinds later this year.
Are you talking about like semiconductor stocks?
Yeah, semis may become a bubble. To me, they don't seem like a bubble yet. You know, when Nvidia is trading at 19 times earnings, I think it's still a good risk reward. But I think that there are parts of that ecosystem that have become quite expensive.